All right, let's go ahead and get started. My name is Brian Kahn. Good morning, good afternoon, good evening, depending on where you are around the world. It's the holidays. We definitely have a smaller group attending tonight, and that's kind of to be expected this time of year. But hopefully the group that's on tonight, you'll get a lot out of it. You'll be able to ask questions. I'll be able to answer them as we go throughout the presentation tonight. And so Q4 review and Q1 2013 preview. If you want my daily market commentary, you can go to dailyforextradingedge.com. You also have my website where I put all of the different information that I put together each day. These webinars, just quick links to all of the content that I'm providing. That's at my website, jupiterpeakfinancial.com, and then you have my email there. So I just peeked at the headlines and things like that, and so a very fun evening to be talking to you because it could be an active day tomorrow. We'll see what happens between now and when U.S. equities open up tomorrow. But before we get into things, let's go ahead and I'll leave this disclaimer up here for you briefly. And again, as you know, please type in your questions through that chat function or the questions function there on your panel on your end, and I will answer them throughout the broadcast. So we have this disclaimer up there talking about the possibility exists that you could sustain a substantial loss of funds, especially in volatile markets, which we may have over the next few days as we go through the fiscal cliff get together, or the fiscal cliff, I guess you could say, separation over in the U.S. region. And so the volatile markets disclaimer: in volatile or fast market moving conditions, stop and condition orders become market orders, and they're filled at the prevailing price, which may be vastly different from the desired price. Stop loss or conditional orders do not always guarantee a fill, and such orders may not be filled as placed. Substantial losses may occur. All right, so to go through this and just kind of expand on it, as you know, there are no guarantees out there as far as order filling, and no matter if you're putting in a conditional order or a market order, it can move from where you thought it would fill at in very fast markets. Outline, let's talk about fundamental analysis. We'll give you a brief kind of review, if you will, of what happened. So we're going to be talking a lot about fundamentals, and then we'll get into technical analysis. So the meat of tonight's webinar is the Q4 review, talking about USD elections, pickup in volatility, maybe central bank activity. So a lot of this is going to be covered in the beginning there in that fundamental analysis. So again, the meat of tonight's presentation will come out, I think, a lot in this fundamental analysis. And again, it's a very, very really good evening to be talking about it, given what's going on with futures in the equity markets and given the news that's out there. And then again, we'll get into more of the preview of what's going forward, of what we can expect or what we think we can expect. And then a quick review, questions, make sure I answer those, and links to various resources that IBFX provides. So fundamental analysis: how do you stay on top of what's going on? I'm going to show you where I go so that you can see my daily routine, and then I can kind of give you my guidance as far as what I think it means for me as a trader, what it means for me as an investor, and then where I can go for technical analysis to start to time the entries and build trading plans using risk reward. So number one, your broker provides you great fundamental information and technical information, so great collaboration on the part of different analysts, just like myself. You know of Raggy Horner, that also provides commentary for IBFX. So aside from your broker and getting to different places, you can go to Forex Factory, which is a link provided by IBFX, and that's a great way to understand what economic data is coming out. Traders are always looking forward, so we want to know what's coming out in the future. You should have access to a TV and some form of the market reporting, whether it's CNBC, their global version of it, or Bloomberg TV or Bloomberg.com, and then other market sites that you use. So let's go ahead and let's leave this screen really quickly, and let's go into the internet, and we'll just go ahead over to, first, we'll go to the economic calendar. So I'm summarizing a lot of this stuff on my commentary. So whether you go to Daily Forex Trading Edge or you go to Jupiter Peak Financial, that's where you get the commentary from me as far as what's going on. So a lot of the people that I work with, traders and investors, they don't have time to do all of the research, and I'm trying to make it easier for them. So I'm doing some of the research for them and providing that commentary for them. So You can be on here every couple of weeks with me hearing what I have to say, but you also can be reading 3, 4, 5 times a week what I have to say on that daily market commentary. Today, in the U.S. at least, it was mixed data. We had Philly Fed that came in better than expected. We also had unemployment claims right here that came in a little bit basically right on expectation, so nothing big there. Tomorrow in the U.S., if I click on this week, tomorrow in the U.S. we will get durable goods, which is a volatile number, but it is a expectations kind of a view of capital spending, big ticket items here in the U.S. So that's kind of the biggie for the U.S. tomorrow. But all of this data is taking a back seat. It's taking a back seat to what? Well, aside from paying attention to what I have to say, because I'm paying attention to the big things out there and these little micro things in each region on the economic calendar, but the big thing is House scraps vote on Boehner's tax plan B lacking support. U.S. futures slump as House Republicans delay vote. So obviously all of you are aware of the fiscal cliff, and obviously that's big. It's in the biggest economy in the world. Everybody's looking to the U.S. to see what they're going to do, and so that's the big fundamental event that happened that drove U.S. futures down. So how do we know that U.S. futures are down? Well, Bloomberg has them, and you can look at the futures there, but you can also go to your broker, and you can kind of pay attention to it. If your broker, you could use a number of different ones out there. But right here, you can see this is the future. So this is March futures for the S&P, and we closed right around 1430-ish in that area, and we're down at 1420. We were much lower. We spiked lower, and we've come back up. So this is the future. We don't know where we're going to open up, but we could open up lower. Things are down. So that makes sense based on the House, the Senate, the vote and things like that, that they're not making progress over there on the fiscal cliff talks. So we'll see what that means. Again, this is just one event, but that's what really I want you to pay attention to is fundamental analysis. These current events, it's very, very, very fundamentally driven. One day we're up, one way we're down, and it's kind of a guess. And so that's what you have to realize is we've been like this before. We've been through this before with Europe. Are we going to bail Europe out? Or are we going to let Europe fail? And it was a very tough time to have conviction and to put on big trades and to say, I'm going to hold on to this trade day after day after day after day, because day after day after day, things were changing. We're up, we're down, we're up, we're down. Central banks could step in at any time. So that's where we're going. I don't think that that's changing. We're dealing with it right now, right at the end of the fiscal year, or right at the end of the calendar year, right at the end of the quarter, and we're rolling right into next quarter and next year, kind of with the same issues. Europe is still an issue. Fiscal cliff may not get done. Central banks are definitely around. So that's what's going on now, and that's a preview for what's going on forward. We're still going to be dealing with it. So that's my daily routine. I'm writing for you guys to be aware of what's going on, and I'm gathering that information from different sources, such as the Economic Calendar at Forex Factory, such as Bloomberg.com, and I'm trying to summarize it for you guys, and then also give you a technical picture. So technical analysis, we're always paying attention to trends, support, resistance, and then the very, very important intermarket relationships, and I'll show you that as we move technically into some charts. So now just to get into quarter four review, we had USD elections where we have Obama in for another 4 years, and obviously we're dealing with tax issues and the fiscal cliff issues. And what I wrote here, and remember, I create these about a month in advance so I can get these over to IBFX and the compliance can go through them, and I can kind of prepare on them. So I was saying, are we going to see a pickup in volatility? And yes, we're going to look at volatility tonight, and we're seeing a pickup, but I put not really. Not really, because central banks are still involved. They're involved in Europe. They're involved in Australia. They're involved in the Bank of England. They're involved in the Bank of Japan. They're involved here. The Federal Reserve just made an announcement last week that said we're here. We're here through 2015 now. I call it quantitative easing to infinity and beyond, because they could be around forever. So even though volatility is picking up a little bit, it's not really picking up, because we still know that the Federal Reserve could jump in and say, hey, things aren't going well out there in the economy. We're going to be here to back you up. So it's giving the equity markets a bid. It's keeping volatility capped a little bit. It's keeping trading ranges capped a little bit, because people don't have enough conviction to say, I'm going to hold on to this. I believe that this interest, this pair is going to increase against this pair for a long, long, long time, because at any time that could change from central banks stepping in and saying, hey, we're gonna change things. So be aware of that volatility could pick up, but how much can it really pick up? intermarket relationships, we've got to be understanding what is going on with interest rates from the central banks. What does that mean with equity markets, and then that relationship between different pairs reacting differently as far as equity markets going up or down. And again, like I said, central bank activity, we're still here. So this Q4 review, aside from USD elections, is pretty much going to be very similar for the Q1 preview. Volatility may be capped, intermarket relationships are important, central bank activity, and we could maybe put in there the fiscal cliff, obviously. So just be aware that we'll be adding things into our repertoire as we continue to pay attention into our analysis on the fundamental side. So Q1 preview, and then we'll move into technicals and look at charts. We'll start with volatility. We'll look at the equity markets, and then we'll move into Forex pairs. Are we going to see more of the same? Central banks intervening. Are we going to see them capping that volatility? And if that volatility is capped, make sure you're using realistic expectations. I've used that word in every single webinar for the past 6 or 9 months as trading ranges have kind of shrunk. Make sure that you're trading off of realistic expectations given what is factually happening with trading ranges. Whether you're a futures trader, Forex trader, options trader, equity trader, look at what you're trying to achieve and make sure that what you're trying to achieve is consistent with what is actually happening for the time frame that you expect to be in that trade. If you're a day trader and you're trading Forex, maybe 10 or 15 pips is very realistic. 50 to 70 pips is not realistic given trading ranges. Let the charts tell you that. So also, given that there's a lot of unknowns, given the central banks can jump in, given fiscal cliff unknown, the trading size and frequency, are you really, really confident and you can put on a large trade and you really are confident over the next few minutes, hours, days, weeks, months, knowing that things can change in a heartbeat fundamentally from central banks or from the fiscal cliff or from Europe, whatever it may be. So really, how confident are you? Because even though you could set up something technically, and trust me, I believe in technicals, I use them, I live off of them, technicals can get trumped by the bigger picture out there, by those central banks and things like that. So just keep that in mind. Let's look at the big picture trends and ranges, kind of looking back and seeing where we can go forward with equities and with those Forex pairs, and you guys can kind of pick them. I'll let you pick a pair if you want to, and we can look at them. So before I jump into those charts, I'm just going to see if there's any questions coming out. Let's see here as I jump into the panel here. Someone asked, I think if I'm reading right, was it to trade this holiday? Is it good for a trend? Go ahead and retype that if you will, because I'm not sure if I'm understanding the exact question. Something about the holiday and the trend, but go ahead and ask that again, and I'll check back in just a moment and see if I can answer that. So let's go ahead and move into the charts first. So I told you I'll start with volatility first. Actually, before I even go into volatility, we obviously have the futures there. So that's the futures. I'll bring up volatility. And a lot of you Forex traders aren't used to looking at volatility, and I think it's important. I've stressed this over and over and over. I'm an option trader. I also try and mitigate risk on portfolios and things like that. So I'm always looking at volatility. And I actually wrote this today. I took a snapshot of this in my commentary today. And if you guys understand support and resistance, well, I think you can see pretty clear what this blue line is doing. It's support. So overall, volatility has been going down. All right, here's the volatility gauge. It's been very, very low ever since, besides just a little pickup in the summertime, it's been really, really, really low, meaning the equity markets are doing well because volatility is a fear gauge, uncertainty and anxiety. If fear and uncertainty and anxiety is low, equity markets should be doing well. So to just do the opposite of this, here's the S&P 500. All right, it's going up for quite a while, and we're very, very close to our highs. We'll come back to this because there's some trend lines and fun things to look at. But let me go back to the VIX and just show you that it's been going down. And when the VIX is down, uncertainty and anxiety is down. And so even though in the real world there's a lot of uncertainty and anxiety, the equity markets are saying there's very small uncertainty and anxiety. So I don't care what's going on in the real world. I care what's going on in the financial markets that I'm trading right now. And all I know is that volatility is low. But I also know that when volatility comes down to around 15, I can't guarantee it's going to go back up, but it has gone back up in the past. Again, no guarantees in the future. That's why I use stops. That's why I trade the proper amount of contracts if I'm an option trader, or shares if I'm a equity trader, or contracts if I'm a forex trader, and the right amount of lots, that I'm trading. So no guarantees, but in the past it's been showing that it's peaked up, and so if you decide to take a long trade there on the VIX, no guarantees. If the stock market and the fiscal cliff gets done and the stock market goes to the roof, this may drop down and you may have a loser, but you're willing to take that. You're either going to have a winner or loser on the trade. No guarantees. We put our stops and our targets in. So the VIX, though, around this area has seen some support, and it launched off there. And I'm guessing that if we have this relationship correct, intermarket relationships, if the equity markets are going down tomorrow, then the VIX is going to shoot up a little bit higher. Just to give you another volatility index, because VIX you can trade options on. You cannot trade the outright stock on, but VXX, which is the short-term futures on the S&P 500 volatility, you can actually trade the shares of and own them. If you're an equity trader, you can do covered calls if you own them. This is a lot of fun because this is a portfolio protection mechanism. If you're nervous about a large portfolio and the equity market's going down due to fiscal cliff not getting worked out, due to the S&P hitting resistances, we're going to look, then you might buy shares in this, and then you can always do covered calls to lower your downside risk just a bit, or you can obviously generate income with it, whatever the reason is. Obviously, no guarantees. I don't care what strategy you do. If the anchor, if the most expensive part of that trade goes against you, you will lose money. So you still have to have trading plans. You still have to have stops and targets and alerts and use that. So that's what the VXX looks like, just another way to look at volatility. So here's the S&P, the ETF on the S&P 500, and check it out over the past 6 months. Again, if I take off all of these lines here, all right, and we just look at support and resistance, I think it's a lot of you could say, hey, that makes sense. There's resistance up here in this area. Until it gets above this area, there's some resistance. So maybe people are taking off some of their long trades. Maybe people are buying some, going short, or maybe they're buying some puts if they're option traders, whatever it may be. But as far as we're concerned, until it gets above this level, resistance is holding, all right? And again, based on futures, we may open up a little bit lower down here. So this area up here, 145 to 147, is showing a good deal of resistance in the equity markets. What does that mean for Forex markets? Let's roll into it right now. All right, so I'm going to switch this application and go right into IBFX. The pound is what I wrote about today. The pound US dollar was one of the Forex pair that I keyed in on in my daily market commentary. There has been at one point a really strong relationship where equity markets go down and the United States dollar goes up. Equity markets go up, United States dollar goes down. As of late, all central banks are easing and they're accommodative and they're helping out their respective economies. But for whatever reason, United States dollar has had the most accommodative stance, the lowest interest rates, okay, the most easing out there. And that's hurt the US dollar. So no matter what the equity markets are doing, as of late, the stock market, whatever it's doing, like I said, doesn't matter. The United States dollar has been getting weak. Look at what the pound has done against the US dollar. 58, 59, 60, 61, 62, 63. It went up. That's on a daily chart. A daily chart of the euro. It surpassed its most recent resistance. So if I put the resistance right here, this red line, we just got through it. In fact, if we look at it on a smaller time frame, it's using that resistance as support. Here it breaks out, support, 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 and it finally breaks out to the upside. And that's a nice trade. Using old resistance becomes new support. You may put in an order to get long here, put your stop down here, and put your target in up here, and hopefully you're out of it. Maybe there's a double top happening here and starting to walk back down. But on a daily chart, the United States dollar is weaker to the euro. On a daily chart in the Aussie, it's done well until a little bit recently, but it's done very, very well, the Aussie dollar against the US dollar, heading up, 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 and then just lately we got a little bit heavy up here. Why did it get heavy? I don't know. Let's look at it on a daily chart. Was there resistance up here? All right, look at this line. Look at that red line right there. Resistance, 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 resistance. That's why paying attention to the long-term picture is so important. Just because you're a short-term trader, doesn't mean you shouldn't be aware of the bigger picture, what's going on out there. So even if you're a trader for 5 or 10 pips, you may have had a shorting bias up in this area because it had such a major resistance area, okay? So just keep that in mind, that you've got to take a look at the bigger picture. And the bigger picture in the Aussie US dollar, and I've talked about this, it's range bound. We've been down to 101.5 on the bottom, and we've been up to 105-ish on the top, all right? And it's obviously topped out there, and it's rolling back down, and we'll see what happens, but it's getting back into the middle of its range. Maybe you put a Fibonacci on there, and you look to see if it can get oversold, and you want to get back long as it drops down here, 104, 103.5, 103, and maybe it reaches a 50% or a 62% retracement, something like that, all right? That's why we're always using technical analysis to see. New Zealand dollar looks pretty much the same. It's had a really, really, really good run against the US dollar, and then all of a sudden it started to come back off. Why? Maybe we go out to a weekly chart and we see if there's more data here. You know, was there more resistance up here again, just like in the Great British, just like in the Aussie dollar? Finally, it went too far and hit some resistance and came off. And it's had a nice move back down, but again, maybe you put that Fibonacci on and maybe you say, the overall trend, I think, is weak in the U.S. and strong in other currencies against it. I'm going to try and get long this currency at a discounted price down here. I put in my Fibonacci's, I use a moving average, I use a trend line, I put in my stops, I put in my targets, and I manage the trade. That's what we're looking to do, all right? So another one, the U.S. Canadian on a daily chart. Again, the United States dollar now is basically what the chart is doing. So the United States dollar has been losing ground, losing ground, losing ground, losing ground. And lately, and this is kind of interesting, there's been a separation between what the currency has done and what the currency is tied to, the United States dollar and the Canadian. The Canadian, they export lots of energy, lots of oil. Oil prices have gone down lately. If you're paying gas at the pump, I think you can notice it. We went from about $3.80 where I live down to about $3.20 in the past 3 or 4 months. But you can see, even though that's happened, the United States dollar hasn't just said, I'm getting stronger, I'm getting stronger, I'm getting stronger. It's found a bottom, but again, that's what I wrote today in my commentary. The U.S. dollar still seems somewhat soft. So me going forward, as long as the fiscal policy of the central bank stays the same going forward, the U.S. dollar is kind of the weakest, so I'm still looking for the U.S. dollar to get overbought pretty quickly, and then maybe I can look and say, hey, it's too rich here. It should go the other way. So as the United States dollar comes up, 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 it's going to be overbought, and maybe I can get short the U.S. dollar again because I'm looking at this trend is down, and I just want to get back in with the trend at a discounted price. That's what I'm looking for. Again, I've got to pay attention to those fundamentals and make sure that they're lining up and making sense. And again, I've got to trade with the right size and the right frequency and the right plan in mind, given what I'm trying to achieve, and make sure that I'm not trying to get too much out of the trade, given that in the next couple of days, a lot could happen out of my control, and I don't want to leave it to chance. All right, so just make sure that you drive that into your head as far as trading plans go. All right, so that's kind of where we're at with the Forex pairs on a longer term time frame. That's what I'm looking for that's what I'm looking for going forward. Is I'm looking to see if the U.S. dollar still seems to have some weakness attached to it. Again, that's what I wrote today. So the U.S. dollar is still weak. The U.S. dollar still soft. So jumping back into the slides, the preview, more of the same. We know that central banks are still involved. We know that volatility may be somewhat capped, so that will affect your trading ranges and your trading plans. Big picture trends and ranges, even if you're a short-term trader, it helped to see the Aussie dollar hitting a big area of resistance up in that 105 handle, and that may have changed your perceptions from being long the Aussie dollar to maybe being neutral or short the Aussie dollar against the U.S. Again, do this kind of work with your Forex pairs. Go and start macro and then bring it micro. A lot of people that I'm talking to usually are short-term traders, but that doesn't mean you shouldn't know the pair pretty intimately on a bigger level and still be aware. There's only a few Forex pairs to trade. The U.S. dollar majors is what I focus on, so I showed you 6. The pound and the euro, the Aussie, the New Zealand, the Canadian, the Swissy. So those are 6 pairs that right there that you should know those levels, the long-term levels and the local levels, very, very, very intimately. So review, Fundamental events are key. You've got to know when they're coming out. Use your broker. Use the analysis they're providing with the different collaborators. Use your economic calendar. Use my blog to summarize them. Use the Daily Forex Trading Edge. That page is very, very strong with about 7 different people providing commentary on different pairs and different relationships and different trading styles. Technical analysis. You've got to do the work. I just showed you doing that work on a long-term chart and then helping me out kind of on the shorter-term time frame as well. So the Q4 review, we obviously did the Q4 review and right here the Q1 preview going forward. And it's always up to us to update that analysis fundamentally and technically and move forward. That's why we're always doing research. That's why when we get in a trade, we just don't set it and leave it alone. We're coming back to it. We're managing it. I call it massaging it. I'm moving my stops. I'm taking some off. I'm doing different things depending on the strategy, depending on what kind of market I'm trading. And the last thing that I'll say is trading psychology. You've got to be on top of your game in these markets with trading psychology. And I'm not afraid to say it, but if you're trading well and if you're seeing profits, don't be afraid to book them. Don't wait too long, because as you can see in the equity markets, yesterday we were down big. Today we are up big. Tomorrow we're going to be down big possibly. And so that is not fun to leave it to chance. So if you're seeing, a good trade, don't be afraid to take it off and move on to the next one. But overall, I think you need to really, really, really watch how much you're risking of your account in these markets, because it's not fun to put in a good trade and be close to taking it off, and all of a sudden a fundamental event taking that away from you and taking a loser to a scratch into, or taking a winner into a scratch into a loser. And yeah, it can happen the other way. You're about to get out for a loser, and then boom, it takes it to, as a winner. But more often than not, we're hesitating, and a winner could get mismanaged into a loser. And so I don't think that these are the markets to kind of mess around with that. So trade the appropriate size and make sure that you're trading with the appropriate, stop measures in place and moving them and just adjusting them as needed. All right, so next webinar will be in a few weeks in middle of January. Topic, same thing, we'll run through fundamentals and technicals. The main topic, I didn't switch this, that'll be to be announced, so I'm not sure what we'll be talking about. I'll write that in the next few days and get that over to IBFX, and then they'll put that out in their marketing campaign in their emails. If you have questions for me and what I do with my consulting and how I work with people, you can always reach out to me via email. And then here are all the links, the education site of IBFX, where I post the commentary. All of my webinars get recorded over to the YouTube page for IBFX, so there's lots and lots. There's almost 3 dozen on there now. And then obviously you can reach out and see me on my blog as well, Jupiter Peak Financial. So with that, have a happy holiday, have a great new year, and have a good start to the new year with your trading and with your investing. Thank you very, very much for your attendance this evening.